I made a 180, and it was profitable to treat it as the second-class citizen to gold. But earlier this year, when it dipped under 30, when I looked at the fundamental argument, it was never stronger in the 41 years I've been involved. So I became a silver bug. And I also said it probably would lead gold for quite some time to come. And I think that's happening here. I think you make an excellent observation. People who are going to talk about, the Hunt brothers and once went to 50, well, to get back to that, you're right. It's almost going to have to trade at 200 for inflation. So what I have said, and it probably throws me into the silver bug camps completely, is that triple digit price of silver is a legitimate target. But first of all, it's not that much more than a double from here. It sounds like a lot because for a lot of years it was single digits, low price. But I think it has every reason to continue to rise with gold. And the competition for it, the stock market. Somebody who almost 5 years ago decided to sell all his stocks and bonds to own physical gold, and then give that advice to a financial planning group that I'm part of. And of all our clients, only one listened. We still have a lot of people that are not in gold at all. And I think that's one of the underlining stories that isn't discussed, that for a market that's literally outperformed stocks and bonds since the turn of the millennium. So think about this, if I just sidetrack for a moment, Jesse, and some in the financial institution will take it as it's directed to them. They shouldn't. It's an overall view. First of all, after 41 years in the business, almost 2/3 of the financial advisors giving advice today were either not born or in diapers when I started. And they've only been in since the millennium started. And yet, if you'd ask almost all of them what's been the best performing investments, they'll tell you stocks and maybe bonds second. None of them talk about gold, but gold outperformed both of them. And yet, here, as you pointed out, as we hit 3,600, still not any really widespread interest in North America. And I think when you go to other parts of the world, there is. Look, in China, Jesse, and I know you're familiar with this, on weekends they go shopping to buy gold. Here we go shopping with money we don't have to buy things we don't need. So I just think the underpinning, even though the price is up, and this is very important, maybe others might not say this, but I think it's worth hearing. So when I started in the business in the early 1980s, most people perceived stocks were dead. For 13 years, the Dow only traded between 700 and 1,000. In fact, the very famous Business Week front page said equities are dead. Wall Street was extremely bearish. And an unknown young man came out of Gainesville, Georgia, named Robert Prechter Jr. with a philosophy and a technical analysis no one really knew of, Elliott wave theory, and said the Dow's going to 3,600. And they just prosecuted him to call him every name in the book. And then when the market took off, he became popular, and then he made a call about the crash in 87 along with me.
The skepticism surrounding gold today mirrors the doubt surrounding stocks in the early 1980s. Back then, mainstream headlines declared equities are dead, just before the Dow exploded higher. Few believed forecasts calling for 3,600 on the index. It seemed impossible. Yet decades later, we witnessed 36,000. Gold faces that same disbelief now. At $3,600, critics argue it's overvalued. But history shows that the impossible often becomes reality. When momentum shifts, prices can climb far beyond what traditional analysts expect, especially when fundamentals point to even greater demand ahead. Gold may be entering its own Dow moment.
And the perception was, how could it possibly go to 3,600, let alone a few decades later, 36,000 and more? So that same feeling's in gold right now. People, especially people that have been bullish and profiting from it, this 36, this is way out of line. Yeah, it's great. It give you all the reason, but how could it go a lot higher? It's not possible. You have to take that same philosophy. There's no reason it can't. In fact, I would argue it's not cheap anymore. Someone that was buying it at 1,300, seeing a tripling, but the fundamental argument for gold has never been better. We had at one time suppression by central banks who were offloading it. Now they're the biggest buyers. We had clearly not any society thinking it was money. Clearly in Asia, particularly in China, They view it as money. And of course, the BRICS, and that's one of my biggest bullish factors for gold, is I saw the de-dollarization and countries moving away from the United States economically and from their currency as bullish for gold. So I think the more important way to answer your question is not talk about some of the general stuff or inflation or even against the stock market, is to admire how it's performed in an environment wasn't as conducive as it is now. So that would argue that I still think it has to go a lot higher over time, but I think a reasonable target of 4,000. And remember, when you're in all-time highs, other than a psychological number, there's no real resistance. So, pick 4,000. Yeah, that'll be a round number and so forth. And, Wall Street has treated gold like kryptonite. I think 0.5% of portfolios are assumed to have some exposure to gold. Can you imagine if people just went to 1 or 2%? It's still a very, very viable market for the long term.
Central banks, once sellers of gold, are now its largest buyers. Nations like China, India, and Russia have been building reserves as part of a strategy to reduce reliance on the U.S. dollar. The BRICS alliance is quietly laying the groundwork for trade systems that could one day be anchored by gold. Unlike Western investors, many in Asia still view gold as money, not just a commodity. With de-dollarization gaining traction and U.S. debt piling up, gold's role in global finance appears to be strengthening. This isn't speculation, it's an undeniable shift in economic power.
I think it's going to play a significant role in the BRICS. They have not acquired all of this gold as a trade or personal investment. They certainly can't flip it to someone that's going to pay even more so they profit from it. I think it's been accumulated. It's still probably 12 to 24 months away before they officially come out and say, okay, this is how we're going to trade among ourselves. And part of that is going to be gold. I don't think there's a worldwide situation coming anytime soon, because I think things have to get a lot worse before people realize how messed up we been with fiat currencies. I do still think that one of the ways that they're only going to be able to sell treasury bonds, especially long dated ones, a year from now, because I'm a big believer that short rates can fall, but long rates are only going to go higher. I think that's going to find a way that the Trump administration could reprice its gold that it owns to whatever the current price is, and also introduce longer term 40 or 50-year bonds with some sort of gold backing in order to get people to buy it. I think that's going to be how difficult it's going to come for the United States to fund itself, while other world bond markets, as we speak, are imploding as well. I made a 180, and it was profitable to treat it as the second-class citizen to gold. But earlier this year, when it dipped under 30, when I looked at the fundamental argument, it was never stronger in the 41 years I've been involved. So I became a silver bug. And I also said it probably would lead gold for quite some time to come. And I think that's happening here. I think you make an excellent observation. People who are going to talk about, the Hunt brothers and once went to 50, well, to get back to that, you're right. It's almost going to have to trade at 200 for inflation. So what I have said, and it probably throws me into the silver bug camps completely, is that triple digit price of silver is a legitimate target. First of all, it's not that much more than a double from here. It sounds like a lot because for a lot of years it was single digits, low price. But I think it has every reason to continue to rise with gold. And the competition for it, the stock market.
Silver, long treated as gold's overlooked cousin, is starting to shine again. With industrial uses in solar panels, electronics, and electric vehicles, demand is surging. Adjusted for inflation, silver's 1980 high near $50 would equal nearly $200 today, making current prices look historically cheap. Some analysts now see triple-digit silver as a realistic target, not a fantasy. As investors broaden their search for alternatives to stocks and bonds, silver's dual role as both an industrial metal and a monetary hedge could make it one of the most explosive assets in the coming cycle.
I have to throw this in. I made a big change a couple of weeks ago. I was not in the stock market crash camp. My January forecast for our clients was the stock market was going to be either side of unchanged. I told people to avoid U.S. equities, get into world funds. I love the Chinese market. But a couple of weeks ago, stuff just screamed that we could now we were very vulnerable to a hard fall or even a crash. And that has been competition to gold and silver and also cryptocurrencies. And so a lessening of the bull move or an actual decline, as long as it's not a total crash, could only aid the gold and silver. You know how I know that, Jesse? I left the metals and mining industry as a main place of business for myself in 2013. I dipped myself back in 5 years ago when I got very aggressive in gold and mining stocks and all. But I'm hearing from people in the last few weeks that I haven't heard from in 10 or 20 years and saying, hey, I was looking up metals and I saw your name. I thought you left the business. And then, of course, the follow-up question is all the same. So what do you like? And I think we're just at that stage now where, other than that little audience that always confined ourselves to, we used to call ourselves the hard asset crowd. I don't think we say that anymore. It's being broadened out to generalists. And I think that's going to bode to help the metal prices higher as well.
Mining stocks, once ignored, are quietly outperforming much of the broader market. Companies like Newmont are leading the S&P 500, yet remain absent from most portfolios. The sector is benefiting from record free cash flow, while exploration companies, the riskiest but most rewarding plays, could deliver exponential returns as the world scrambles for critical minerals. With new discoveries taking a decade or more to reach production, the scarcity premium is rising. If major producers choose to acquire rather than expand organically, junior explorers could see buyouts at valuations far below today's gold price, offering asymmetric opportunities for investors.
Much of the mainstream financial media in the U.S. is tied to the hips of the financial service community. They're not going to write things go against it. They're advertisers, you know. So I never expect them to write glowing stories about that, because gold and silver have been treated like kryptonite since I've been in the business by the financial service industry. And I don't expect that to change until the public overrides that demand and says, hey, listen, I'm listening, or I got this neighbor and they're killing it, and blah, yada, 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 yada. And so that's when I think the public will come to it. The mining stocks, even the exploration, and they're two different species, and I'll address them both. The mining stocks, as I said earlier, when I originally sold some of my physical gold in the beginning of the year at 3,500 to buy the major gold producers, which greatly outperformed the performance of the physical gold, they have many quarters ahead of just unbelievable, legitimate printing money through free cash flow. And what will happen for them, and what will keep that sustained for them, is as we peter out in the stock market here, and we're seeing a lot of companies now not meeting the low-end earnings estimates, so they can always say they beat them. These generalist money managers are going to hear about these mining companies. Look at Newmont Mining. Maybe today, as you and I record, depending on if Palantir gets hit enough and Newmont is rising, it's going to be the best performing stock in the S&P 500. Right now, it's number 2.
Gold and silver have long been treated like kryptonite by Wall Street, dismissed in favor of equities and bonds. But as debt burdens climb, currencies weaken, and bond markets falter, precious metals are being rediscovered by investors who once ignored them. Whether through BRICS integration, a potential U.S. gold revaluation, or rising global demand, the case for higher prices is stronger than ever. With gold eyeing $4,000 and silver poised for a breakout, the era of hard assets may be entering a new golden age. The real story is just beginning. Will you be ahead of it?
And so that means it's outperforming 498 other general equity stocks. And yet I would tell you that if we looked at people's portfolio, not half or 1% have Newmont Mining in it. So there's still so much upside demand for mining shares, and they should do well. But where I went to, and it's the most riskiest and speculative end of it, and remember, Wall Street created the word speculating, so don't really call it what it really is, and that's gambling, where you have to be mentally and financially prepared to lose part of all your capital. But the juniors is really where we're going to see a really bang for the buck. We're already seeing that in some incidents. And the reason is the world has not only shrunk to where companies can go and without too much risk and try to find the metals that are so critically needed now, everybody realizes, but the amount of money that has not gone into that industry to find these things. And remember, even if you hit it tomorrow, that you just went to a rock and drilled and it doesn't work that way, it takes several years of exploration and all. it's probably anywhere minimum, depending where in the world, 10 to 15 years before it comes out and pours the first metal and all. So when that recognition is realized by everybody and everybody realizes how we're scrambling, you know, a gentleman made a good point to me the other day, and it was Sam Lee, one of the, it's actually the largest stock that I own, North Island Copper and Gold. And he was just on a trade mission for Canada to Korea, South Korea, and Japan. And he made a very good point is, even though they're world renowned for producing so much of the stuff we need, technology stuff, appliances and all of that, their entire base of metals that they need is from outside their country. They don't have any real own supply of their own. So here we have the world is scrambling for critical minerals and all. There's not been a lot of money put in them. I think that's going to make exploration companies become darlings for a period of time. And the majors, their currency is so strong now because of their stock, they're not going to try organic growth. They're just going to go out and buy because we're still seeing good deposits selling for as little as $20 an ounce with gold at 3,600 and going higher. So to answer your question, I'm sorry for being long-winded, but I just think the mining shares and the exploration stocks, their day in the sun to where everybody's seeing it hasn't even arrived yet.